What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I've been paid over $6,000 this month in passive income. I am not even close to where I want to be. See this 10K a month? That's a reasonable goal for me. And I'm not even close to that point yet. I also want to have dividend growers. I also want to have dividend ETFs, which I'm going to be buying. I'm going to be showing you some dividend ETFs that I'll be buying. But I also want to have some high yielders, and I want to have some real estate investment trusts. So REITs are good for income. High yielders are good for income. But dividend growth always is a huge factor. And those will be added eventually. But I need some more dividend ETFs to start building up this dividend portfolio, and I'm going to show you some dividend ETFs that I'm hoping my dividends start buying. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these ETFs right now. So the first one I'm going to go after is the NEOS Boosted S&P 500 High Income ETF. Now, I do have the NEOS S&P 500 High Income ETF, but I also like the Boosted High Income ETF as well, which I'll jump to. Now, as you see, it has a distribution rate of 16.66%, which is higher. It does have a little bit of a higher management fee of 0.98%. Now, here's the thing. The fund's exposure to the underlying strategies of SPYI, combined with the boost of the additional long exposure of the S&P 500 and additional income through the XPX covered call strategy, is designed to create approximately 150% of the notional portfolio exposure to SPYI. So let's think about this real quick. We have SPYI, and SPYI is one of my favorite ETFs as well for income. And we get a better distribution, which is around 60s to 70s. So we have a higher distribution, and it's distributed monthly as compared to SPYI ETF, which is in the 50s. So this has a distribution rate of 12.08%. So, and again, the expense ratio is a little bit lower at 0.68%. So again, there's a higher expense ratio. This one's a little bit less riskier than the boosted high income ETF. Now the S&P 500, once that goes up, that's going to help SPYI, which is going to help the boosted high income ETF. So again, implementing this in my arsenal, and I also have SPYI, which I'm a big fan of. So you get a good distribution there. And you have another one that I really praise and love, XQQI, the NEOS Boosted Nasdaq 100 High Income ETF. So I like this one. Again, it does the 1.5 times of the NEOS Nasdaq 100 High Income ETF. So we need Nasdaq to go up. We need the Nasdaq 100 High Income ETF to go up. And then we need, that will help with XQQI. But the thing with XQQI that separates it with the boosted S&P 500 ETF is the distribution. And the NAV is actually doing pretty well too, but the distribution is much better, which I'll jump to. We are in the 80s and 90s mark. So there might be a potential, and again, we have a distribution rate of 20.10%. We have a potential of hitting the dollar mark. Now this one, if you look at BTCI or the Bitcoin ETF, Bitcoin has been down significantly, and the distribution has hurt significantly because Bitcoin has been down. But this one is probably my number one NEOS high income ETF for distributions. I think this one, again, looking at the trends of how QQQ or the Nasdaq 100 is done, this one is possibly, if the trends go well, going to be distributing some serious firepower. So that is monthly distribution firepower. Having these two with each other, and including this other one, SPYI, which has actually done better than the S&P 500 ETF. That's quite impressive. So just look at that. That is very impressive. So we have to look at some things too with OVL. And what I like is also is its distribution has started to go up, which is nice. Look, we have 30s, 20s, and it's in the 40s, and it might crack the 50s soon. So we have OVL, which is doing extremely well. So these three implemented in my arsenal. Hopefully CHPY will add shares of these. And I don't think I have to be in taking the money yet and flipping it. I think I can still be okay in reinvest mode. I start my new job on the 1st, which I'm very excited about. A lot of changes, a lot of opportunities with this one. A little bit of a better work-life balance so I can focus on my YouTube channel. And I'm very excited. These are physicians I used to work with in the past, and very excited to reunite with some doctors that I haven't seen in a few years. So it was a great interview. It was something that kind of came in May, and it was like, whoa, okay. You know, I was skeptical. I'm like, I don't know, but you know, working with these guys and working with a bigger organization and opportunities, I had to capitalize on it, just like these ETFs. So I wanted to discuss these three, and I just wanted to give you an update on my dividends as well. So they're going to be reinvesting for this week, it looks like, unless something drastically changes, but I'm going to be reinvesting the dividends. I'm going to be buying these three. And there's one also I want to go over that's a little bit underrated, which is TYLG, the Global X Information Technology Covered Call and Growth ETF. So this is a really interesting one, which I'm going to jump to. TYLG seeks to generate income by writing covered calls and information technology select sector SPDR fund. Does 50% on the information select, it does calls on it. On 50% of the information technology select sector SPDR fund, and allows investors to capture half of the upside potential of the information technology sector index, and it does a monthly distribution. So that's one thing. Again, the gross expense ratio is 0.64%. That's not too bad. So here's a few things. Okay, here's some of the holdings right here. The net assets, the State Street Technology Select Sector SPDR ETF. We have 53.46. We have NVIDIA, 6.99. Apple, Microsoft, Micron Technology, Broadcom, AMD, Intel Corp, Applied Materials, and those are some really good ones. And it has also Texas Instruments. It has some really good companies, Seagate. So you have that. That's a lot of them. Okay, so we got 47.8% semiconductors, 26.7% in software, and 25.5% technology. There's a few things that I want to go over. The TYLG is starting to make some noise. So here's 2024. It was 23 cents, 16 cents. Now it's jumped up to the 30s right here. So just be aware of that. This is another one that's underrated. Now, I don't have it in my dividend portfolio. I may implement that. I'm hoping M1 Finance eventually adds that one. So just be aware of TYLG. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will see you tomorrow. Take care and have a great Sunday fun day. Again, don't use my YouTube channel for tax advice. Don't use it for financial advice, go to a financial advisor, a tax advisor. Again, I have a disclaimer in the beginning of the video. You guys take care.